Hi everyone, this is Jason Burak. Just want to give you guys a quick update. I want to show you guys some of the progress we're making on the website. The developer is coming along. I have the website screenshot up here. If you go to wallstreetformainstreet.com, you won't see this. This is just the back end on us, just to show you what we're doing. Coming up with a nice clean website design. This is not obviously the major big bucks website that we want to do yet, but we're putting something up there, you know, with Libsyn, Libsyn, and iTunes and Stitcher Radio, so you don't have to just go to YouTube to listen to our interviews. So you can also download the MP3 or listen on iTunes. So we should have that up again. Here's the rest of the website. If you want to take a look, we're just testing it out now, but that should be up in the next couple weeks, hopefully. And I think you guys will really like it. It looks pretty good so far. If you have any other feedback, any other things you'd like to change, any comments or stuff, just email us, wallstreetformainstreet@gmail.com. If I think there's going to be live chat on the website, so if you register and give us your email, you'll be able to register on our website and also interact with other people in the Wall Street for Main Street community who listen to podcasts and discuss or network within yourself, and develop, you know, a little social media community there so you can interact. So we're gonna work on that too. The major reason I did this video today was I kind of wanted to show you guys kind of what a what a parabolic bubble stock looks like. Okay, now this is the Pure Funds ISE Cybersecurity ETF, symbol HACK, like, you know, computer hacker. So it's a good simple choice. There is fundamental reasons, obviously, for these cybersecurity stocks to be doing very well. I mean, look in the news. There's just so many hackings, whether it's with Target or so many of these other corporations. You know, governments are hacked, and those are the only ones that we hear that are reported. I think if you listen to some of these conference calls from like SourceFire or the cybersecurity firms, there's actually, like, these large corporations are hacked at least, you know, there's one major event in a day, and some of these large corporations or even tiny governments, they've been hacked by very sophisticated hackers, maybe even governments or corporate espionage, and they don't even know it yet. So, you know, there's fundamental justifications for this, but here, look at this chart. This ETF, I think, debuted in November, right? And it got off to a decent start. You know, a lot of these ETFs, and there's many thousands of them, a lot of them fail within the first year or two. They go bust. But this one looks like it's going to succeed pretty good. So, you know, it's just started gapping up there, and then it did a volatile trading range. And then right around, okay, February 2nd, right, it basically went vertical. I mean, we have almost a parabola here. Look, follow the arrow up. That's basically straight up parabola, all the way through to, let's see the date here, right towards the end of February 20th or so. And we're building kind of a base here with some volatility, but I can tell you charts though, and this is from looking at financial history and just experience with markets, charts like this, they don't stay flat. So when you have a parabola like that in a chart from the time periods I said, and it's a clear parabola, basically, there's very little corrections in there, and it's almost, you know, a moonshot. They don't stay flat. So either the stock is gonna this ETF, based on some fundamental justifications or news stories about hacks and things like that, because it's not just, you know, corporate espionage or corporations hacking each other or the Chinese government hacking the US. We have, you know, countries hacking each other. So we have, you know, Russia, where Jim Rickards reported that Russia put Russian hackers, probably from the Russian government, put some viruses on the NASDAQ. And then we have the US hackers, you know, with Stuxnet in Iran, and so many other hacks that the US has done. So there's a lot of fundamental tailwinds for this, but the valuations on a lot of these cybersecurity stocks are just getting nutty. I think they're trading at well over 100 times earnings, or maybe even it's 100 times free cash flow multiple, which is just an insane valuation. It's not sustainable, but that doesn't mean it's going to crash immediately. But what I can tell you though is, as a trading idea, you may want to take a look at a long straddle. If you're a more sophisticated trader, a long straddle would be playing options on the volatility here. So the odds are, when you have a chart pattern like this, it's not going to go into a trading range for that long. It's not going to stay flat. It's either going to keep going way, way higher, based on more news stories coming out about hacks from how corporations were hacked and, you know, people lost identity theft and things like that, or governments are hacking each other. And that's the new version of cyber warfare, where as instead of, you know, the old version of warfare where armies lined up and there were bombs and things like that, governments instead are getting more sophisticated with their warfare. You know, the U.S. is either attacking the Russian currency with economic warfare, or the U.S. has gotten the bond rating agencies in the United States that the U.S. government controls, you know, Moody's and S&P, to downgrade Russian debt. And then, you know, the high-frequency trading algorithms, some of the hedge funds at the U.S. Government or Wall Street may have been ordered or paid off to do this. They then go after the Russian currency or the Russian bond market or Russian oil or natural gas stocks or things like that, or the oil price. So this is the world we live in now, where there is a new version of warfare. So I think long-term cybersecurity is going to be in a major bull market, but the thing is about valuation. So anyway, though, back to this, I think, potential trading opportunity here. The thing about the long straddle is you can fail on the long straddle if you don't get volatility. So a long straddle is you pick a strike price, say $28, $27, $28, $29 a share, and you buy a put and you buy a call. And if there's a lot of volatility, if the stock, you know, gaps way higher and continues to go to the moonshot on more economic warfare in cyber warfare, hackings or things like that, the ETF for thing would probably shoot higher, probably 35, 40. Because there is no overhead resistance really on this chart. There's very limited in the area that it's in now. It may look like it's breaking down a little bit here going forward, but it could also bounce right back if there's a major news story. But there's not really a lot of overhead resistance on this chart. Anyways, though, you know, this ETF, it's not going to stay, because it's gone up so high so quickly. It's not going to stay in that little trading range here from February 20th until today, which is March 4th. It's not going to stay in that exact little trading range for that long. It's either going to go way higher again on some type of news story related to hacking or cybersecurity or economic warfare, or it's going to crash. That's just my opinion. There's very little probability event that it's going to stay flat. So I think a long straddle here, the reasons the way you can lose money on a long straddle is if there's no volatility, because a long straddle, if the stock goes way higher or it goes way lower, because you buy a put and the call at the same strike price and also the same time duration. So either it takes too long for the time duration to play out and you don't get it, or the stock, there's no volatility in the ETF. I think the odds, the probability of no volatility in this ETF is extremely low. I really don't think it's going to stay in its trading range. So it's either going to crash very soon, the ETF, and have a really nasty correction, or it's going to gap way higher. It's going to, because there's very little overhead resistance. It's really literally in uncharted territory, because it's a brand new ETF. It's in a cybersecurity stocks are in a major new bull market, as I kind of outlined very briefly. So I think this type of long straddle trading strategy, it not only works for this, it also for this cybersecurity ETF, it also works for, you know, some of these high flyer stocks that, you know, don't trade all really on fundamental valuations, like a Netflix or a Tesla or Green Mountain Coffee Roasters or an Amazon. These volatility trades, I've made people, I've helped make people money for them. I posted these things on Seeking Alpha in the past, and on Netflix, I think when it dropped to like 200 after a nasty correction, I was like, yeah, the best way to play this is with a long straddle. So you buy a put and you buy a call, and you give yourself enough time to let it play out. And I think someone made $100 a share on buying a call. And then he was like, well, what should I do next, Jason? And I was like, well, what I would do is I would cash out my call. I would, you know, take the big profits, and then I would redo the long straddle again and play the volatility components. I would redo it at a new strike price. So I would take my profits and I would roll some of them into a new long straddle strategy, buying puts and buying either a put and a call at the same strike price in a new area. So a potential trade here for the cybersecurity ETF, to give you a little point of reference, would be to buy a put or a call at 28 or 29. Probably the $28 one would cost you a little bit more, but buying a put and a call and giving yourself some time to let this play out. But you should, the probability, let's just say, is pretty high that the volatility in the stock is going to be absolutely enormous, either higher or lower, that it's the odds are extremely low that low probability event is going to stay flat in a really tight trading range. Like I said, the only two ways normally that a long straddle doesn't work is if you don't give yourself enough time to play it out, or the stock stays flat in a not wide trading range, in a very thin trading band. So just giving you guys some ideas. Wall Street for Main Street, the podcasts are doing well. We're almost at 600,000 views on our YouTube channel. We thank you very much for that. We think we'll be at 1 million probably sometime in 2016. And, you know, we're just going to keep getting better with the quality of our interviews. You know, look at the names. How many other people have had Jim Rogers, Dr. Mark Faber, Grant Williams on in basically the same week? Jim Willie is coming up. Jeff Berwick is coming up after Anarchapulco. So thank you again for your time, everyone, for this video. And, you know, hopefully you learned a little bit of a trading idea. This is a higher risk trade. There's no guarantees in trading, guys. But if you have a little bit of extra cash, more speculative cash, this is an interesting trading idea. And like I said, these volatility, these long straddles, which take advantage of the volatility in these high-flying stocks that Wall Street drastically overvalues, they tend to do very well in the well-popularized stocks like Amazon and Netflix and Green Mountain Coffee Roasters and Tesla and things like that. So this is just one, and I showed you a chart of like basically kind of what a bubble is starting to look like. So could the bubble go higher? Oh, yes, of course. I mean, this cybersecurity ETF, you know, if there's hackings and stuff like that, this thing could go from like 28, 29, it could go to 40 or 50 very quick. Because, like I said, there's very little overhead resistance, and it's in uncharted territory. So just a trading idea for that, and that's the type of stuff our paid consulting clients get. They get our best trading ideas and things like that. If you guys sign up for paid consulting work, which is $100 an hour regular price, you learn investing and trading ideas like this and how to put them on. Okay, bye everyone.